Welcome back. The size of mega deals in the Permian Basin have been rapidly accelerating the timeline of oil consolidation. Now, back in October of last year, ExxonMobil announced its $64.5 billion acquisition of Pioneer Natural Resources. And earlier this week, we caught wind of the latest merger, Diamondback Energy and Endeavor Energy Resources. Our next guest says we're entering a new era of unprecedented deal-making for the shale sector. Let's bring him in now, Matthew Bernstein, Rystad Energy Senior Analyst. Thank you for joining me this morning. So walk us through what this Shale 4.0 season looks like when you have these mergers continuing to come into play.
Yeah, thank you. Happy to be here. So yeah, kind of as you alluded to there, we really do see this as a new era in the shale sector. I think over the past several years, since right before COVID, these operators have been able to prove that they can essentially live within their means or, invest into new development within their cash flow. So from the investor side and the shareholder side, you're seeing a bit more easiness and a bit more acceptance of things like taking on new debt in order to finance acquisitions, because ultimately this Shale 4.0 era will really be defined by the need for scale for the long term. And that's really the motivation behind all these deals, is really needing to scale up in terms of the acreage and the amount of drillable locations that you can have for the future, because ultimately this is a finite resource. And, there are, a general consensus on oil demand, at least moving forward for the next decade. So, in Shale 4.0, these companies are going to want to have the most scale in the most commercial areas. And really that is the core of the Permian Basin.
And speaking of Diamondback and Endeavor, the Permian Basin, one of the most lucrative oil producing regions here. How much does that change the space here?
Yeah, certainly. So, there's not a lot of companies out there left the same size as Endeavor in terms of the amount of future locations that Diamondback's acquiring in that deal. So really, you're creating a company, this new Diamondback Endeavor merged firm that is right up there in that top upper echelon of inventory holders in the basin. So moving forward, you're going to see more and more of that region consolidated by just a few names. And it's also going to change the nature of the types of deals that we see in the Permian. As I said, there's not a lot of large private targets out there left. There are a few, but what we expect to see in kind of the next phase is potentially some more public-to-public mergers of equals in order to build scale that way.
And which are some of the oil companies that you think could be next ripe for this M&A activity?
Yeah, so, several operators have effectively grown very quickly inorganically in early 2023 prior to the Exxon Pioneer deal. So that includes some names like Civitas Resources, Vital Energy, Ovintiv, Permian Resources. And these operators were able to acquire private operators that were kind of bundled up by large private equity groups and then who were looking to exit that investment. So I think as a lot of these companies that I mentioned look to kind of gain scale inorganically in the Permian during 2023, I think that some of those names could be ripe either to be acquired by a larger company that perhaps has stayed out of the deal making so far, or potentially merge together and create a formidably sized company in that regard.
And what do you think could be some of the headwinds that we could see when it comes to the energy M&A space here? Because obviously we've seen a lot of criticism here for some of these big mergers, not so much seeing that though in the energy space.
Yeah, if you look at it, obviously the Permian Basin is the most productive and really the most economic region within the U.S. onshore oil fields. That said, there are still, many other areas of very economic oil production. You have the DJ Basin in Colorado, the Bakken Shale in North Dakota, the Eagle Ford Shale in East Texas. So while a lot of the activity for economic reasons is centered in the Permian Basin, these deals aren't necessarily, I'd say, consolidating, a tremendous share of the entire U.S. oil output in the hands of a few operators.
Certainly important context to add there. Appreciate you taking the time to join us this morning. Matthew Bernstein, Rystad Energy Senior Analyst.